And the annual sugar production is likely to drop by around 4% in the year, or rather season 2013-14 to around 24 million tons as cane yields fall in key producing states due to bad weather. Industry and government officials have said that today. The prices in the meanwhile are trading still near those 3.5-year lows, and the government in the meanwhile today has said that they will mull 2,500 ton SOPs on raw sugar export and review the raw sugar export incentives next season as well. Remember, yesterday was a cabinet meeting and the government has yet again deferred any decision on the incentives. Palm oil prices then have advanced to the highest level in 2 weeks on speculation that dry weather in Brazil may reduce soybean output in the world's biggest exporter, trimming global vegetable oil supplies. The prices also have taken support from jump in the Chinese soya market, signaling a stronger food and fuel demand. The Solvent Extractors Association in the meanwhile has just compiled the export data for export of oil meals for the month of Jan 2014, and they have said that there has been a decline of around 47% for the month of Jan as compared to the Jan in 2013. The export of oil meals during April 2013 to Jan 2014 is reported at around 3,61,000 or rather 36,15,000 tons there compared to 37,56,000 tons during the same period last year. That is down by nearly 4%. The export of oil meal is down in January due to disparity in soybean crushing that led to lower processing of soybean and availability of soybean meal for export as well. Rajesh Agarwal, spokesperson and coordinator, Soybean Processor Association of India, now joins us on a phone line from Indore on more on the same stuff. Rajesh, hi, welcome to the show. What's your sense really, first of all, on the kind of numbers that we're getting to see in sense of sowing and the price volatility also in 2014?
Pardon me, sowing of what, ma'am?
Sowing of the Rabi crop, the numbers that have come out, and also the kind of pricing that we are seeing because of the run-up in the international markets.
Well, as you rightly said, the recent news emerging from Brazil has definitely supported the international complex, and rally has further strengthened the Indian market. Indian markets are already running at a higher level, and it has been further strengthened by this news emerging from Brazil. Brazil market is further supported by the consumption of biodiesel in South America. So the oil market is supported, and the meal market, as you rightly mentioned, is at a higher level, especially in India because of the lesser supply of beans as well as the higher prices of soybean prevailing in the market and the disparity in crush. So the prices are likely to remain range-bound in these levels unless there is some change in the international news coming out of South America.
Rajesh, also since the beginning of 2014, there has been an underlying support continuing for the edible oil space. Do you see the same going forward, and what kind of a range or a percentage move are you expecting forward for the sector?
Well, rapeseed arrival initially may have some correction in the market, which always happens if we look traditionally. I am not sure what's going to happen this year, but traditionally, rapeseed oil supply definitely gives a correction in the market at the initial stage. So we might see a correction to some extent, or stability in prices to an extent in the initial stage in February. And then subsequently the prices may stabilize and strengthen again. But there would be a correction level at a point when there is sufficient supply of rapeseed oil in the market, when the crush starts, which has begun in a smaller way.
Rajesh, one final question, because when the year started, most of the people were actually betting on castor seed prices running up in 2014. Would you agree with that view?
I would not be able to comment on that.
All right, Rajesh, we'll let you go. Thank you so much for joining us with your sense on the edible oil sector. Let's also get in some numbers then. And the total Rabi sown area, as per reports received from states during the week ending 7th Feb, stands at 654.16 lakh hectares as compared to 618 in the same time previous year. So the number of acreage also already has gone on the higher side there. The total sown area under wheat, total pulses and core cereals are final for the Rabi season now. Details, if you look at those, shows we have seen areas sown for Rabi rice kind of increase to 25.93 as compared to 18.84 in the previous year. So rice sowing, of course, has been on the higher side. Ditto is the case with wheat as well. 315 lakh hectares done of sowing there as well. Remember, we are expecting a huge crop for the wheat this time around as well. Nearly 100 million tons is what the markets are working with. The pulses figure also shows us gain here, 161.90 lakh hectares of area sown for that space as well. And of course, the coarse cereals at 60.94 is a very marginal decline coming in. As far as the oil seeds go, you are looking at 90.07 lakh hectares of total area being sown till time in case of the Rabi crop. Let's get on board then, Vijay Bamwani, and he joins us live in the studios. Vijay, what's your sense, first of all, for the edible oil space? Because the area sown is slightly on the higher side. But having said that, you also are looking at the prices jumping up higher because of the kind of gains that we have seen on back of Chinese demand and bad Brazil weather.
Good evening, Manisha. What is also adding to the pressure, I might add, is the volatility in the rupee. I think edible oils are likely to see a very interesting year in calendar year 2014. Around election time or shortly thereafter, I expect the rupee to come under pressure, and that will start impacting edible oils fairly significantly. At that point in time, I expect crude palm oil to firm up if it has already not run up prior to that level. And similarly, there will be pressures of the bullish kind on probably even crude oil. I'm talking of energy, which will push up demand for biofuels, and that will have a trickle-down effect to refined soya oil, crude palm oil, and also impact pricing in the agri space. So overall, I remain bullish for calendar year 2014, though in the absolute near term, traders might witness some amount of thrashing about of prices, but it's still a buy on dips market for the swing trader.
Vijay, we also spoke about sugar and how the announcement yet again has been deferred one more time. What's your reaction to that? Because the market really seems to be jumpy now with this kind of behavior, or rather deferred movement coming in from the government at all time.
Manisha, from a trader's point of view, I think the more you vacillate on taking a decision, the more you're setting up the price for a vicious move. And I'm of the school of thought that the price move is likely to be in the upward direction. So my viewpoint of sugar heading towards the 3,000 mark on the financial futures market in end of April or maybe in May still remains constant. It's still a buy on dips market, and if I get 2600 or 2625 in the mid and far month futures, I'll go for it on the long side.
Let's talk a bit about gold and crude prices, because there has been a rebound into them. Both of these commodities seem to be closing the current week on a positive note. At least in the international markets, you have seen the gold prices trading up. But when it comes to the Indian weekly prices, there has been some decline. The gold prices in India have dipped below 29,000 rupees. So that's a bit of a negative. In the international markets, more than 1% of gain. But in the Indian markets, you are looking at some bit of a decline on a weekly basis here. Vijay, how are you looking at it? Because, of course, the rupee has a major role to play here. More than 2% of decline for gold in this week. How would you want to trade?
Manisha, I still remain circumspect on gold and silver both, and I think gold prices need to be watched at 28,600 levels. Now that's a critical short-term level that momentum players need to watch out for. If in the coming week gold is to decline below 28,600, there could be a decline of another 400 to 500 rupees, more towards the 28,000 levels or 28,175 odd levels. On the upside, I think it'll be a fairly challenging task for the bulls to take gold prices above the 29,000 mark, barring any unforeseen fresh data points or triggers emerging to counter this hypothesis. I would bet on declines in gold price, and with that will come a trickle-down effect even on silver prices.
Energy is another one that has seen some gains continue as well. The natural gas prices also, which seem to be just about trickling from the kind of highs we saw in this week itself. We are just about holding 300 rupees. Do you see the prices dipping below that?
Manisha, I've held 288 levels as a threshold for at least a fortnight now. I think we are heading towards that. What you have seen is regulatory intervention by way of stepping up of margins in the overseas markets, and that is likely to cool down the speculative frenzy that you saw in natural gas in the last couple of trading weeks. I think 288 is a level that you need to watch out for. Below 288, the bulls are likely to be severely compromised and will take time to lick their wounds and come back onto the long side. At this point in time, as we stand, I think the 314 to 318 band will now act as a very firm resistance for short-term traders.
Vijay, let's go back to the agro space, and we have been talking about the edible oil space, and we've got a couple of views onto that already. But what's your sense now on the soybean and the soy oil prices? Because we have seen choppy moves coming in with the kind of latest cues coming in. Which one would you want to bet on?
I think soya oil might see a slight bump up in the near future, and soya bean might remain marginally under pressure. Maybe another 2% decline before it starts to show signs of stability. But I think soya oil in the coming week or so might attempt an upthrust of 1%, 1.5%. So buy the dips on soya oil, but the quantum of exposure that you will take should be fairly curtailed.
Vijay, also, what's your sense on the other couple of edible oils here? Because RSO is something that you have been slightly bullish about as we started the year. The other one really has been castor seed, which caught speculators' eye, and we saw a lot of speculative talk at least coming on the higher side.
Manisha, whenever the market shows signs of fancy of the trading population, one should get a little circumspect. And castor seed futures above the 4,000 mark don't really attract a value buyer. I know value buying is a little bit of an oxymoron here in the futures market, but you need to time your trade effectively. I would feel comfortable buying at 3,870 odd levels, give or take 20 rupees here and there, but chasing the price up close to 4,050 levels is fraught with risk. And even if the prices were to go higher and I miss the trade, I have no regrets, because the risk-reward ratio is now somewhat evenly poised. So the downside and the upside is appearing to me as an even of 175 to 200 rupees. I would wait for the odds to favor me by a lower price at 3,875 or 3,900 levels.
Let's also get in the discussion Mr. B.V. Mehta. He is ED, Solvent Extractor Association of India, and he joins us live as well. Mr. Mehta, hi, welcome to the show. Today, of course, has been a day when you have seen more gains coming in, especially for the palm oil prices, which are trading at a 2-week highs, and Chinese buying for soy also being on the higher side. That, of course, seems to be supporting the Indian prices, but what's your sense for a slightly longer term period?
See, the palm right now, if you look at it, is in the bottom rather than up. In fact, you will surprise that RBD Olein is cheaper than CPO at CFN Indian port by about $15. And this is something unusual is happening. Now your finished products is getting at the lower price than your raw materials here.
So what's your sense then going forward, if that is the kind of cues, how would you wanting to be, advise the traders here?
No. See, practically CPO, if you are importing the CPO, there is practically no parity for processing here. You are a loser. So time buying, so long the government do not change the duty structure and create a duty difference of at least 12 to 15%. The RBD Olein, it's better to import RBD Olein rather than CPO.
Fair point. Also, Mr. Mehta, we have the SCA report that came in today, and that really shows a very sharp decline when it comes to the export of the oil meals for the month of Jan 2014. How are you reading the numbers, and what do you think took to that decline?
Basically, we are outpriced in the Asian market. The one reason is the bean price is quite high, whereas in the South Asian market, we have to compete with the other origins like Argentina, Brazil. They are cheaper. So, and also the quality wise also we have suffered this year because of the heavy rain at the fag end of the season. So quality also suffered, and also the number which is being discussed. Now government says that the total crop is about 150 lakhs, which we don't find anywhere, not even 120. And most of the traders and industry believe that the crop is somewhere in 105 or 110, not more than 110. And availability is so poor. The farmers are holding the stocks, maybe in expectation of the higher price. And with this price, if you buy the seed and process, you cannot compete in the world market. So it's a very odd situation for the industry, whether to process or not to process during the season. Yeah.
So, Mr. Mehta, because it's the soy meal export which really add to the premium into the Indian prices, with these kind of numbers that have just come out from SCA today, would you say that there could be some more pressure coming in, at least for the domestic prices?
Domestic will be comfortable. Let me tell you, domestic supply, so for demand for the domestic, they are comfortable. There is no complaint from the friend from the feed industry. The only question is, what is the crop number? Once the crop number is known, then everybody is comfortable. Now today, 105 or 110 is like last year's. That's not an issue. But we are losing the export market. Iran was a major market for us last year. Now Iran has opened up, so naturally Iranian will look for other origins too. Yeah.
So, Mr. Mehta, what's your sense then going forward from here? Because while the international markets are running up, our export numbers for meal are not so good. With that kind of a scenario, what's your sense on where the edible oil sector for India is headed from here on?
Oil meal, definitely we are down this year compared to the last years. And again, if you look at the next 6 months, looking at the crop size, definitely export will be down. The silver line is we are going to harvest a bumper rapeseed crop, and so the exports of rapeseed meal will pick up. And also we are trying that China withdraw the ban on the import of rapeseed meal and other oil meal from India. So if that happens, the China is another big market for us. 500,000 tons they buy it from India. So that also we are trying. We are also trying to open the new market like Myanmar, Bangladesh and other neighboring countries. That's SAARC country is also a big market for us.